This entry into the history of financial futures is sponsored by Eurex.
I was a banker at the outset, a master in Swiss banking, and I was working for first Credit Suisse, including Credit Suisse in Montreal. Then I moved back and became the youngest branch manager Credit Suisse ever had. With the soft and sweetie age of 24 years, I was branch manager of a suburban branch, that is. Was not a very important thing. And then later on, I think it was 76, I got the offer to become a member of the executive management Bank of Tokyo in Zurich, which was a subsidiary, and that was the place where I actually started to get involved in brokerage, in stock exchange, in even settlement issues and things like that. It was a very, very small unit. And then suddenly I got a phone call from a headhunter and said, would you want to become CEO of the first fully electronic exchange and clearinghouse in which we built in Switzerland? I said, yes, why not? And then I was on the short list later, and they appointed me to become this first CEO. It was still in the project phase. The whole thing was actually Arthur Andersen, who was in those days still existing, and who was mandated to build the system and also mandated to build up the organization of this exchange, including rules and regulations, all the legal stuff, plus also all the other rules which are necessary for exchange. I was told shortly before I left the Eurex environment, so when no harm could be done anymore, I learned from one of my longtime chairman of the board that the reason they asked me to become the CEO was a purely political reason. You have to see, in those days, we had three big banks. We had Swiss Bank Corporation, we had Union Bank of Switzerland, we had Credit Suisse. All three had a candidate in the game, and I was the fourth candidate on the short list. And as you can imagine, if you select a UBS guy, Credit Suisse and Swiss Bank Corp wouldn't have loved it. So I had a much better chance because I was the neutral guy coming from this, well, Japanese, non-important institution. We were supposed to start with SOFFEX in October 1987. And I think that was the first time and probably the last time I was happy about an IT delay, because, as you know, we had in October 87 this market crash or market correction, as some people called it here. So we were opening the Swiss Option and Financial Futures Exchange then finally in May 1988. So that was the way I got into this industry, and I actually remained, with the exception for 2 years, I remained in this industry, either SOFFEX, Eurex, or then afterwards as a consultant to various derivative or potential derivative markets in particularly Southeastern Europe. We had option contracts. That was the very first contract we had, and actually the very first contract traded on SOFFEX was two contracts on underlying UBS, and this was the first trade which was created on the SOFFEX system. I mean, the system was pretty much okay. We had, of course, as always, if you get something very new, we had a few, let's call it, bugs in the system. We had a few crashes of the system, but it never actually created too much of a harm, except maybe for the reputational risk which was there. but this could be solved pretty easy. But I have to remember that the big market participants, so the three big banks plus the private banks, were very strongly attached to this new institution, and because there was a lot of personal involvement of certain executives in the big banks, and if the whole project had failed, it would have also been a bad signal, or probably even a departure sign for these executives in the banks. Well, it was, of course, a very important move in Switzerland. You have to be aware that I think you heard that before. We had initially something like 5 stock exchanges in a country of with about, in those days, about 6 million people, which was, I used to say, all the exchanges were in distance of a day ride by horse or by horse wagon. And so from that perspective, you had one in Geneva, you had one in Lausanne, you had one in Bern, you had Basel, you had Zurich. It was not really making a lot of sense. And when we came in with the derivative market, it was clear that we could not apply the same pattern. So meaning that we could not have option rings or options floors in all these 5 places. Actually, the reason we went electronic, and it was similar then later on in Germany as well, one of the main reasons was a federalistic issue. Had we put the option market in Zurich, you would have had immediate opposition from Geneva or Basel. Had we put it in Geneva, immediately Zurich would have opposed against that. So the only rational and federalistically perfect move was actually to create an electronic nationwide exchange by which you could access from all 4 corners of the country. And indeed, we had members from Geneva. We had members from the Italian part at the initial stage, and these guys were pretty happy that for the first time, and some of them for the first time, were able to be member of an exchange in the first place. So that was really something which was completely new, and I think the format of this electronic exchange was also attractive to Germany, because Germany had, and to a certain extent still has, the same issue with these various regional exchanges all over the place. And certain markets, you cannot really split liquidity to an extent where we have a little bit in this place, a little bit in another city, and then yet another part in another corner of the country. The other aspect which became important later on was then, and I think that was one of the reasons also why eventually Eurex became very successful, was the fact that you could have members not only from inside your jurisdiction, but from other jurisdictions as well. So you could really open up the market to an extent where people could participate in real time from everywhere in the world, as long as they had a communication mean. That was, I believe, the right way to do. The coming together of DTB and SOFFEX was actually at a very early stage a strategic goal. It was a strategic goal because, as I said, we have kind of a similar market concept in both countries. We knew that the German banks would be highly interested in copying us or getting our license. It was actually a move of the 2 boards and the 2 chairmen of the boards of DTB and of SOFFEX, who had quite long discussions about that, but they finally agreed that Germany or the DTB that we would sell the license for DTB to be created at a later stage. That's why DTB just came into the game in 1990. So we were a kind of a guinea pig, because in those days when we were operational, the cash market, the underlying stock market, was open outcry, and we were just on the derivative side. We were on the electronic side, and so we were first of all a guinea pig for the Swiss market to become fully electronic, for the cash market, and also the guinea pig for Germany, because if we had failed, needless to say that no one would have had any kind of interest in buying our license. I think we have been pretty lucky. We had the well, they agreed finally on a license fee of 13 million Swiss francs, which in today's dollar terms would be about $30 million as well. It was something which, the other hand, the German market could afford. But it probably was it was actually the last time we really were able to make a big deal. Later on the Eurex terms, we were also having discussions with various potential markets, but I mean at a much lower license fee. At the later stage, we have futures as well. So for us, it was clear we wanted to start a option market, because the option market was something which was considered more important from a asset management perspective. So considering the asset management and the private banking in particular, which we have in Switzerland, options were more on the investment side of the private bankers than the big banks, rather than the futures market. What we first created on the future side was a future on the index. We had the SMI, the Swiss Market Index, and based on that Swiss Market Index, we had not only options, but we also created futures. First of all, I was the project manager for the non-IT issues to have coming together, to organize that coming together. I'm not talking as a merger on purpose, because it was not really a merger in the legal sense. I was the project manager for the non-IT issues, and Jörg Spielmann, my friend and my colleague, he was in charge of the IT side. So that was actually my role in trying to set up the whole thing and to bring Eurex together in a smooth way, to have a transition which was, because we had two markets up and running, so there was no way of closing it down for a month and then restart again. So it had to be Friday closed down and Monday morning opening up under the new brand name and under the new format, which works perfectly, as a matter of fact. And so this was actually the role. And then eventually I was part of the management team. We were four, together with Jörg Franke as CEO. I was the deputy CEO of Eurex. We had Andreas Preuss from the DTB and Jörg Spielmann from SOFFEX again. So it was this parity, which was actually the same thing on the board level. We had half German, half Swiss board members. And this was some kind of rather political game. It was also interesting that some people were always thinking that if you have four members on the executive committee, chances are that you end up in a tie situation, that two are in favor and two are against. And the assumption, particularly of the lawyers, was that if the tie situation arrives, that it will be two Germans against two Swiss. But frankly speaking, during all my time at Eurex, we did have tie situations, but it was always one German, one Swiss against one German, one Swiss again. So this kind of view of the lawyers was completely obsolete. So that was the part of the kind of funny part of the whole situation.